Candy, along the lines of the internal controls, what are some examples of one or two controls that you believe could have prevented this in the first place? Because I mean, a lot of people have receivables, and a lot of organizations are counting on a person to process those receivables, whether it's donations to a nonprofit or paid invoices for a for-profit. What are some other, besides someone calling customers all the time and saying, thank you for your, I just want to check, what are some additional internal controls that can help prevent or detect this kind of fraud that you were talking about?
Well, I think, especially with returns, there should be a procedure for that. And we were talking about large amounts of money, saying, shipments for $50,000. And I work primarily with small companies. A $50,000 shipment is a lot of money for these clients I work with. And so if somebody else has to verify that this merchandise came back, and one of the other things that came up is when we were doing the physical inventory count, we were looking at the layers, we were looking at nothing matched. So all of these things, and like I said, it had been happening for years, we realized the inventory was off by the exact amount of the theft. So their inventory was also overstated. Mm-hmm. And because they only had one person that did all the entries, she processed everything. There's nobody else that processed anything. There was no control over it. There was supposed to be some oversight on overdue balances from somebody else who just didn't do their job. They did have a very large warehouse operation where they had a warehouse manager who was one of these people that was really good at his job, but was promoted and didn't really know what a warehouse manager did. He just worked in the warehouse a long time.
Yeah.
So he wasn't qualified to be the warehouse manager. Same as this woman that was doing the books wasn't qualified. She barely was a bookkeeper, was not full charge, and had a title of vice president of finance.
Wow.
Had no qualifications, didn't understand a general ledger. But as much as she didn't understand these things, she's pretty smart. Until she got caught. But years, and nobody caught on to it. Nobody caught on that the inventory was off, and they shut down their operation to count inventory. But as they counted it, they handed it to her, and she made the adjustments. Nobody knew. I mean, they had thousands and thousands and thousands of pieces of inventory.
Yep.
So it's not like they were handing it into somebody else.
Yep.
To make the entries, or somebody was double checking it. She was responsible for the entire thing. And as I came in, they told me there was only two people I couldn't touch in the organization. That was her and somebody else who was doing some stuff. But that they're the most trusted employees.
And you know what? You touch on a point that I believe is critical for the organization. Yeah, Danielle's loving that VP of Finance. It's really critical for the organizations that we serve, which is this. You bring up a topic of trust, and you bring up a topic of an entire organization counting on essentially a one-person show in the accounting department. And I want to share this idea with you that instituting internal controls, like one person doesn't do everything, but we do what's called either segregation of duties or separation of duties. People use either terms. And having other internal controls like third-party verification. This is not a signal to your one person that you don't trust him or her. Trust is not an internal control. Trust is trust, and internal controls are internal controls. And if you mistake one for another, you'll get into a lot of trouble. And furthermore, if you really highly esteem the one financial person that your entire organization is counting on, do not expose him or her to such liability. Because if you expose him or her to liability by failing to have strong internal controls in place. Because if someone commits, whether it's it's corruption, asset misappropriation, financial statement fraud. If someone commits an act of fraud, who do you think everyone is going to turn to first? Your number one trusted person who could be completely innocent. But that's who they're going to turn to first, because you haven't protected that person by making it impossible for this type of fraud to occur, because you have controls in place. If you don't have controls in place, you're not protecting the person that you are standing here declaring that you trust so much. Protect that person by having internal controls in place.